That's right. We should be live right now, ladies and gentlemen. Thank you all for joining us on another episode with the Arcane Bear. We're going to be going over our favorite crypto assets from Bitcoin, Ethereum. We're going to jump over and take a look at Avalanche and the Kyber network, as that went out part of our private message group today. So keep your eyes on your inbox if you are a part of our private group. Right out the get-go, because we have 120 people already online. Give us that thumbs up just to help make sure anyone who wants to find this stream while we are live has an easy time doing so. And we're going to go ahead right away and we're going to switch to all the valuable information that you guys want, which has to do with charts. So you should be able to see Bitcoin on my screen right now. And like pretty much every other content creator, they're going to be talking to some degree about this pennant. Unimportant to me. Often what's fun about these pennants, well, first off, they do a great job of faking people out, because you'll often see the spring do something like this and move above the top of the pennant. It can be irrelevant. You can also see a rising gradient bottom, as we have mentioned longer in many of our episodes as well. So really what we're trying to do is always re-go over. And more than just kind of, so you guys know, it's not that I'm just talking to you. I'm actually kind of talking to myself as well. Like, not like a crazy person, like, oh my God, Tio's talking to himself in the jungle. Is like, no. I'm actually learning every day and going through that process of consistently educating myself as well. So one of the important parts of showing up with you guys is because I actually don't know everything. Lo and behold, who would have guessed that? Tio doesn't know everything. But the more I show up, the more I study, the more I learn. And if I'm sharing with you guys during that process, the better I become at articulating what it is I have just learned. Okay, so that makes sense. This pennant is not as a huge of interest to me, although that's going to be probably the main topic of discussion around the crypto sphere. Really what we want to do is, again, keep our eyes on this horizontal trading range. So we saw our primary support here, our buying climax, our first shakeout, our secondary test, and then our first kind of bumps up against resistance. So one of the reasons why these trading ranges are so powerful is because really what we're doing is measuring human nature. We've gone over in other previous episodes that some of the big boys in this space, people like Dan Moorhead, the CEO of Pantera Capital, which manages over $600 million in crypto assets. You've got Grayscale, who have billions of dollars in crypto assets under management as well, are all looking for a moderate six-figure Bitcoin. Now, I probably should open this up, but it just came to mind right now. So let's go stock to flow model. So for those of you that don't know this, there's the stock to flow model for Bitcoin. Now, the stock to flow model is really, people I think rely on it a little bit too heavily in terms of this is what the price will do. This works well when there's demand. Now, luckily, since I bought my first Bitcoin at 90 bucks, there's been an enormous amount of demand for this incredible technology. And the stock to flow model roughly represents the cost of mining, the production, and how many Bitcoins are being created every 15 minutes. I believe that's the block time for the new creation process. Anyways, it's about every 15 minutes. Double check on my math there, because I'm not the greatest tech person, but at least I can somewhat conceptually understand what is going on here. So the stock to flow model has us balancing out somewhere maybe around $100,000 throughout 2021 and 2024 until the next halving cycle. But as you can see in our previous cycles, we get these big blow off tops where we shoot up past the stock to flow model last time, $20,000 before, coming back down, going below it at below $3,000 when the stock to flow model at that price was sitting around $6,000. And if you look at previous indicators, we will zoom out to the daily chart. AX gives us a $20, says, juice worth the squeeze, Arcane Bear. Thank you, my dear brother and friend. It is great to see you. I always love when you show up. I can't wait till we can go out and I will not be made to look ridiculous, ride around in bicycles in foreign countries again. But what we're going to do right now is we're going to go back and look at the Bitcoin price at this particular area. So the stock to flow model during the entirety of 2019 said we should be around $6,000. And as you can see, we bang, 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 bang. We actually formed a very solid area around that before dropping down into our selling climax. So one of the important, the mic is peaking a little bit. Okay, there we go. Should be a little bit better now. Yes, okay. Hopefully that was better. I'm talking louder than normal too. I'm pretty excited today. So hopefully thank you for the heads up on the peaking mic. So again, the stock to flow model is showing us this relative indicator for the average price, but we do have these blow off tops. If we were sitting at $7,000, we almost went 2.5 times higher than that. So if we have a stock to flow model sitting out in 2021 saying we should be at 100,000, there's a very easy reason to believe we might see upwards of $280,000 to $300,000 in terms of what happens when we go through those explosive prices. Bitcoin has almost built it in as a feature that it goes through explosive price ranges. This has to do with part of the liquidity crisis, which we have gone over in previous videos. If you are a fan of Glassnode, as myself am as well, this is another way to look at some of the deeper metrics behind Bitcoin. And one of the big issues is how much liquidity is on the open markets. And as you can see, look at this. Wow, we have dropped even lower this week, down at 12.71% of all Bitcoin is left on the open exchanges. That means a very tiny amount of it, like just roughly in my mind, we've got around 19 million or like 16 million mined at 12%. We're talking about like 1 million or 2 million Bitcoin at max on the open exchanges that really decide that market price. And without that, like the more liquidity that ends up on the market, the more volatile it would become, both to the up and downside again. So as we have less Bitcoin on the open market, the price can move up and down very easily. If all of a sudden these whales, as we gone over before, looking at some of the, where is this one? On the left-hand side, market indicators, supply, transactions, volume, which one was it? Lifespan, fees, exchange, entities, addresses there, right at the top. The amount of addresses with Bitcoin over 1,000 Bitcoin is skyrocketed. Look at this. It is just since December, basically December 24th, the amount of Bitcoin or wallets with over 1,000 Bitcoin has just shot through the roof. Not only that, it's been on a steady incline since April of 2018. So the whales have been increasing their holdings. Now, I don't have 1,000 Bitcoin, but what I can tell you is that if all of a sudden those whales were to start to release their holdings on the open market, and you were to start to see the addresses move that onto the open retail side of things, the price would fluctuate dramatically, because that little bit of supply could massively increase the volatility. But it also does the same for the upside. So here is what we've been going over. We've been studying our Wyckoff accumulation and distribution charts. We have flown. As soon as we left our horizontal trading range right around here, we absolutely flew out of this area like a rocket ship to the top of our first regression line. Now, regression lines are a really interesting way to measure kind of price volatility movement. From this, we'd gone over in our previous videos too, the importance of understanding the Fibonacci retracement tools. This is another way to basically do point and figure charting by taking all-time highs and stacking them effectively. Again, Bitcoin almost has a built-in feature of being crazy explosive. So right now, just to kind of give a highlight of that idea, you take from your previous all-time high wick, you measure out, and we have an area somewhere between $75,000 to $85,000, which I believe is where the next run is going to take us. So if we get rid of all that kind of messy charting on this big idea that we had looked at, and we go back to that smaller time frame, and we can continue our conjecture on this new trading range, again, remembering that all the big players who have hundreds of millions of dollars in Bitcoin are expecting it to go higher and maybe average out around $100,000, it's extremely likely that this is not a distribution chart, that this is in fact a reaccumulation. So again, we see our primary support, our buying climax, our shakeout, our secondary test, and we're continuing to get that test. So we still have not seen phase C. So here's phase A, highlighted by our buying climax. Here's phase B, although I'm not sure we're done that. Phase C is going to be highlighted by a spring, and which will also be identified by a significant amount of volume coming into the market. So we had gone over these prior. These are what is known as a reaccumulation chart. I, for some reason, just constantly forget to upload our private group stuff. But nonetheless, again, for those of you that want, you can join our private group. But look, everything that you would ever want to know is basically on the internet for free. The mastermind and the community you don't get for free. But if you want to find the information and do your own studying, just research Richard Wyckoff. So these reaccumulation patterns, again, phase C is usually highlighted by the spring. And again, this is where the pennants often will confuse people. As you can see, we might actually even get a more bullish reaccumulation pattern for Bitcoin, something like this. But more importantly, we're looking for phase C, which we haven't seen yet. So we're likely going to go through a reaccumulation process that brings us into March. Now, I thought we were going to get more of a distribution pattern, but I think what we're likely to see now is that instead of these bigger distribution patterns, what we're going to find is that the hopeful that we were interested in was the return to the 21 week moving average, which has been, at least in my books, like a highlight of a healthy bull market cycle. But now that we're forming a reaccumulation pattern, it's actually very likely to say that, okay, if we go out until March and we continue this reaccumulation pattern, that actually might bring the 21 moving average somewhere around to the $20,000 to $30,000 area. It would hit this nice reaccumulation area, and that would be the spring and a touch of the 21. So I am kind of looking for that scenario now. Not a big drawdown like I had suspected, but more importantly, this retouch, maybe even as low as 23,000. Springs can be very dramatic. As you like, if we take, for instance, and we rewind in time, I don't think anyone suspected that Bitcoin's price would plummet down to the $4,000 area in March, but that's what a spring does. A spring is often also highlighted by human emotion in the markets. So this could be a dramatic effect of, say, something like Tether going horribly wrong and being taken off the markets as well. This type of bad news. I think Warren Buffett was the one who said, buy when there's blood in the streets. The spring is that literal conscious moment in human history when something happens that basically creates panic selling in weaker hands, which can often be even bigger institutions, but more importantly, generally people that have less money and they'll need that capital. They may have bought Bitcoin at 40 grand and now they're worried because Bitcoin is all of a sudden at 27,000. So they just hit sell, or it hits a bunch of stop losses that are also within that area. But again, more importantly, that 21 week moving average has still not been touched. And I'm kind of feeling that this larger reaccumulation pattern is going to be that moment where the 21 average catches up to our spring, because we are still very early on in this accumulation pattern. As we've gone over, we've seen phase A, again highlighted by the primary support and our buying climax, and we've just started phase B, which is signified by our primary secondary, our shakeouts, our secondary tests like this as well. So no big spring, although we did see something close last week here with a large amount of supply coming in and a limited down spread. Again, these are important factors. Once we see phase C, it's going to be game on for going long. Effectively, we'll see, we'll just imagine it does the fairly traditional backup phase before exploding to around $85,000. So keep in mind, the patience game here is extremely important. This next little bit is probably to draw out as many retail investors as possible, and for those bigger 1,000+ wallets to continue to acquire Bitcoin at cheaper open market prices. Again, remembering this is not OTC pricing, right? We don't see those sales on these open market indicators. Like currently this is Bitstamp, right? So what we're watching is the volatility of buying and selling on Bitstamp alone. And if we actually go back to our Glassnode chart and we want to look at the aggregate of addresses on the open market, where was this? Close all these down, guys. Excuse me here. Yeah, exchange activity. Where was this? Bitcoin, it was under exchanges, I believe. Exchange activity, depositing, withdrawing addresses. No. Address activity. No, that wasn't it. God, I gotta always remember to leave these open. I apologize, guys. It's address growth. No. Address supply. No. Where was it? Maybe I'm just gonna refresh my chart here and see if they re-show up. What we're gonna do right now. There we go. There's exchanges. I don't know why it didn't give that to me before. We're going to exchange balance stacked. So right now, I want to do a comparison because we are watching the volatility of Bitstamp alone on this particular chart. So let's see how much open market Bitcoin there is on Bitstamp. So here we can see the total aggregate of all the stacked exchanges and the volatility that's coming from Bitstamp. So Bitstamp is currently operating with only actually less than that. So if we go all the way to the far right, maybe we'll even zoom in so it's a little bit of a clearer image to the data that we're looking. So Bitstamp is in the darker green, and with only 112,000 Bitcoin on that exchange, the volatility that we're watching right now is strictly from that exchange, right? So you get kind of an aggregate. This is one of the nice things that Chainlink brought to the ecosystem, which was a more valid data and price supply information to each of these exchanges. So you had a more cohesive exchange price without these massive dumps, because one person with 50,000 Bitcoin could go on and absolutely wreck Bitstamp's liquidity. So Chainlink provides a very valuable data acquisition process as an oracle so that these exchanges can keep a more simplified price. So for instance, you could go to Luno, which only has 8,000 Bitcoin, and if you had 6,000 Bitcoin, you could absolutely destroy the price on that singular exchange, and at that point maybe even acquire more at a cheaper price, which would be a really interesting concept, although not something I am capable of doing. Again, the average price here, actually Coinbase, the biggest holder of open assets of Bitcoin right now, followed by Huobi. Coinbase has over 828,000 Bitcoin, and Huobi at 205,000 Bitcoin. Binance at 300,000, and then descending from there on out. So again, the liquidity potential of each of these markets is really based off how much Bitcoin they have on the open market and how much buying and selling can move that price, and then how well the oracle does a job of distributing those real-time price data inflections so that no one has some crazy like out of the world, like bam, like where all of a sudden the price just drops through the floor because someone sold 5,000 Bitcoin on an exchange that only has 8,000 Bitcoin in the open market. Anyways, that's kind of a fun little side point. Let's dive in. I want to go ahead and say, wow, thank you to the 586 people we have currently online. Give us a thumbs up if you like this content. Remember, if you are new to the Arcane Bear, we are only like 500 people away from hitting 30,000. So let's have a little bit of a moment where we can try to get Tiho and the Arcane Bear up to 30,000 subscribers. So if you're new to the channel, please hit subscribe, because that would be like a big monumental moment. Actually, maybe even when we get there, we'll do a few giveaways. Once we break over 30,000, we'll give away a few $100 in our live streams. And actually, we'll wait till the end of this. We'll go over Ethereum next. Let's just dive into Ethereum. So Ethereum, very early on in its accumulation range as well. Not a sexy accumulation range like we had in the past, where the spread here, you're looking at a 5% accumulation spread. Are you kidding me? Do you know how sexy that is for the leverage trader, those who at least know how to play? This here is not at all sexy. This is so much volatility. There's no making a good trade here. Where I will expect a much more valuable like potential trade is out of the top of the box, where we likely see a reaccumulation pattern. So again, we have our primary support, our buying climax, our first shakeout, our secondary test, our rise up against resistance. We'll probably see another drop back down. Again, we're looking for reaccumulation patterns, so they're not all identical. And just like when you're hunting an animal out in the wild, the footprints aren't identical, but they're pretty similar. And these are our most common schematics. Shout out to Roman Bogmavov. I think he was one of the Wyckoff educational centers as well, who originally drew these up. Richard Wyckoff himself didn't draw all of these. And again, this is the thing about hunting animals in the wild. The more time on deck, as we're 100 years after Richard himself, we've actually acquired more and more information. And that's why we keep showing up, is because there's always more to learn. So these reaccumulation patterns are likely what we're about to see here with Ethereum as well. Which one, I think, is going to be the big question. Again, we've seen our primary support. We've seen our buying climax, our shakeout. We're seeing our second runs into resistance. So for any of you that would like, you could make a guess. Are we going to see schematic 2? How about schematic 3? Maybe schematic 1. Definitely not schematic 4, because we did not have that giant blow off top. So that one's already out of the question. So only 3 to choose from in terms of picking that footprint out in the wild. But again, we see our primary support, our buying climax, our shakeout, and the start of our secondary test. So we've entered phase B, and we just finished phase A. This is really important to remember, not to get impatient. Although if you are new to investing, if you are new to crypto, I think the most valuable information that anyone can ever provide to you is basically investing is like going to the gym. You don't go to the gym one day and hope to make huge gains because you're like, yeah, I hit the gym and I took all the protein powder that I needed that day. Like, why am I not 60 pounds heavier and look like The Rock? No, if you want to look like The Rock and have a bank account as big as The Rock's, what you need to do is you need to go to the gym every day for like decades. And even then your bank account might not be as big as The Rock's, but at least your gains will be. And that's the important part, is that investing is like going to the gym. It's best done through time. So every month I'm still making acquisitions in other areas of this ecosystem, like Avalanche, one of my favorites. Link is another one that we have been acquiring. But let's stay focused on Ethereum right now and kind of finalize this conjecture. So now that we know we're headed towards phase C, which phase do we see? I think we see another drawdown, although we could be witnessing this type of schematic, because we are seeing like the bottom is being held up on Ethereum here right now really well. If we jump across the trading range here, it's going to be hyper bullish for Ethereum. And again, our Ethereum charts, we have our regression lines very similar to Bitcoin up at $2,600. So I have a very firm belief that this next run is very easily going to take us to $2,600. Oops, let's close our momentum indicators there. There we go. Okay, so we zoom out. We've got our full picture of Ethereum right now. I believe it's very likely that we start to run upwards of around $2,600 to around $2,800 on this next Ethereum cycle, and not as a top either, just as this part of the trading range before we see a much broader trading range. This is going to depend on a few big ideas as well. Remember, there is kind of a battle for the layer 1 protocol area. Ethereum is expensive to run gas fees on. How quickly will they be able to get to their upgrades and their staking mechanism, or now that their staking mechanism is in place, etc. How quickly will they be able to reduce those costs to increase the use cases of Ethereum is a really big question. So this area of around $2,600 is a pretty important part. And just like any technology, it could be superseded by something else. So I'm not technology agnostic as a venture capital investor. What I try to do is find unique and cool shit that does unique and cool things before anybody else recognizes that they're worth $1 billion. So Avalanche, Chainlink, Chainlink, apparently my friends were smashing at my door being like, dude, Oracle's like, look at how valuable, and it just went right over my head. Now I just listen to them. So Avalanche is another one of those potentials. Polkadot up there as well, who could move into this sector and really be a game changer. Ethereum has a massive amount of momentum. They have so many builders and developers. But again, a lot of these scripts can be translated onto other platforms as well. So Ethereum might not be the be all end all. So this $2,800 area is going to become a very important one. I have outwards targets of Ethereum based off our similar conjecture, which I believe works somewhat similar to the point and figure charts. That's how we got close to 20,000 in 2017 when we called, not the exact top, but pretty close for Bitcoin. And all we want to do is get close. So that would bring our average price of Ethereum, if we were to get there on the 4236 line, based off that previous buying climax of around 6,000, knowing that we always get crazy blow off tops. So anywhere between 9 to 8,000 could be the final top. And then maybe even find a resting place somewhere around 3,000 or 4,000 for a reaccumulation period out through 2025. Because that's, again, is what happens. You see big blow off tops and then big distribution and then big reaccumulation. So we might end up reaccumulating for Ethereum back down near the 168, which is basically what we had seen when we went from Ethereum at $3, $4, $5, $60 up to 1,500, back down to 80, and then accumulate between 80 and 300, right? So you're looking at a very similar price pattern and price movement throughout time. The Fibonacci and I guess your to some degree or another, your Elliott wave theory is another great way to look for those further steps. But more importantly, let's just stay focused on this step, which again I think brings us to around $2,600. And again, the volatility in this trading range is a little bit higher than I want, but still a good area for accumulation. Anything near the bottom of this trading range was good. As you can see, our momentum indicators had two big buys come in at the bottom here as well. So shout out to Super Kitty for writing these cool momentum indicators. We'll speak more about maybe potentially how you guys can get those, but for now they're just private scripts, so you can't have them. But if you want, you can go to TradingView, and we do give some free scripts away just by typing in Arcane Bear. We do have some of our older scripts that we do give away, so you can keep an eye on that. But for now, we're kind of testing out these new momentum indicators. Another one like this as well, which is called CryptoVac. Put a buy order in for Ethereum, again, back down here at the $920 area. And my personal position is anywhere near the bottom of the trading range at this particular moment is probably a good entry. At least in terms of buying spot or going leverage long here. When you have this much spread in a trading range, like 26%, the best you could get away with is like 2-3x maybe, right, without getting liquidated. And even then, you'd want to be very careful, because you could see another spring for Ethereum that does something like that, down to 730 before spiking back up. The volatility in these trading ranges is not sexy at all, not compared to what we just had back here, where you had a trading range of like 5% in Ethereum with the POC line running through there too at only 8%. That means you could have taken a 10x, entered at the absolute worst spot of Ethereum there, and come out with a screaming play. But yeah, again, I don't suggest anyone play with leverage. Those are for much more advanced traders. The best thing is to become a good investor first and just go to the gym every day for the rest of your life. So absolutely nuts to trade in this zone, as Charles Fuchs says. I agree. It's just way too much volatility, whereas compared to down here, when you see these thin trading reaccumulation range like this, where you can literally measure from top to bottom of wicks, you're talking about 8 to 10%. Like, you could have opened a 10x position here at the absolute worst spot of the trading range, like a freaking noob, like right at the top of the buying climax of the trading range, and still been in your trade. Like, those are that's what I call a sexy trading range. They're very limited in breadth and width, and they often are on their way to explosive moves very shortly afterwards. So again, we'll keep an eye on when the trading ranges become sexier. Again, we might see that it becomes sexier after it leaves the box, and you see a more refined kind of backup phase that only measures maybe 10 to 12%, and then that's a more like intelligent position for those of you who are the savvier of traders and learning to execute these big gains in bull market sentiments. So next on to Link. We were a little late getting some of our updates out this month. I apologize. I just had a bunch of paperwork trying to get my residency sorted here. And this is a much dirtier chart here, but I think we'll leave it like this for a second. It'll look kind of fun. It will show one of the trading ranges that we are watching. Now, there's been some conjecture in the private group about this, so I want to go over it because I think it makes for great conversation. Part of it was this a change of character? Actually, I'm going to remove the CryptoVac just because it looks a little too dirty. Yeah, there we go, much cleaner. Okay, so part of the question was, in the private group, was this primary support and this buying climax, and was this the selling climax? So is the trading range horizontal here, and is this the first backup, or was this actually itself a change of character, distribution, selling climax, first automatic rally, spring? And this is a really good question, and look, I don't actually have a good answer. We could make a very real argument that we didn't actually enter this trading range until we had our first automatic rally way up over here, and that this whole area represented a change of character to the downside first, especially because it was a 63% drop. You could have had this as a buying climax, and then primary support, selling climax, and then the move into your automatic rally, your secondary test, and your spring. And this is actually where I think is probably a more viable way to look at this trading range, is actually the shortened version of it instead of this much bigger trading range. So this would have represented the primary backup. Now, again, the conjecture here, this is probably for those of you who are only studying and interested in studying and becoming better at understanding market cycles. If you're not interested in that, I don't know what you're wasting your time for here, but nonetheless, if you are interested, this is a great way to look at it. Here's the other opportunity where it was this our primary support, our buying climax, our first shakeout, a secondary shakeout, and then what we saw was a run up against resistance, and then a spring for phase to mark phase C. So it would be something like this. So you'd have your phase A, your phase B, your phase C, and then we just entered phase D, and effectively here phase E as well. So kind of a short-lived phase D. Again, for those of you that are new to the channel, what we always try to do is study these potential reaccumulation ranges. So a big part of the question is, are we seeing a trading range like schematic 2 here for Chainlink? I think that's a very high possibility as well. But the previous one we just went over is also a possibility. And I don't actually know. I can't say the difference. And kind of how we started this episode is this is all a learning experience. Like, I don't do this just solely for you guys. I show up here and do this because every day I'm learning more. Like, let me make that very clear. I am a student of life. I've been playing music for like 15 years. I don't pick up the instrument and think, oh yeah, I've got this shit figured out. No, I've had the pleasure of studying with some of the world's best. And I know for a very clear fact that no matter how many years more I get to study in my life, you will never reach a conclusion. And that's one of my favorite things about study, is that it's kind of a lifelong endeavor. So again, with Chainlink, if some of you guys are asking in the private group, I'm sure some of you are watching this video or will watch it later. I don't actually know. Both of these options make sense to me. That you had either a larger trading range here or a shorter trading range that was butted up over here. I'm leaning towards this though, as a phase B, your phase A, phase B, phase C, phase D, and then phase E. Because this was such a big drawdown and such a big change of character at 63% that it's hard to say. Anyways, that's my consensus on that, or my conjecture at least. Hopefully that's helpful. Hopefully me saying I don't know is helpful for you guys as well to understand that this is a constant learning process. So let's go over KNC, because we sent out a private thanks to, I want to give a shout out to Baloo for helping us add and create more content for our private newsletter. I know everyone got this kind of update on KNC this morning, but we're going to be doing weekly DeFi updates now, where Baloo and I go out and basically go hunting for tokens that have not yet broken out of their box, but are looking like they're very close to. So last week, Baloo and I jumped on the phone, and we were looking at, okay, well, here's a nice trading range. We see a little bit of a UTA, which is probably highlighted by some crazy newbie buyer who's new to this sector, our primary spring, and then our first backup outside of the box. So Kyber Network is looking very bullish, which is quite nice. Before it went out this morning, it was down here, so our newsletter like squeaked out just in time to pull off that 10% move today. Again, the main interest here isn't necessarily always to be making trades so much as it is to be educating yourselves. So I'm going to leave it at that. Hopefully you guys enjoyed today's live stream. The last part of our live streams are always where we dive in with the community. We answer your guys' thoughts and questions. We go over what you guys are interested in. So we try to do everything in a well-compiled format, so that way if you're watching the video like later on and you're not watching the live part, you don't have to deal with me answering all the random questions in the live stream. And at the end of the episode, we go over all the live questions and comments in the live stream. So if you're interested in listening to the conjecture later on in these videos, I will continue to separate those two so that it's hopefully more digestible in each of your guys' functions. So thank you. Give us the thumbs up if you like this content. Remember, you can join our private group in the links down below. There is no risk for you, because if you join and you're not happy, we'll give you a refund, no questions asked. So just to drop in and take a look at a bit of the questions here. UTI, that definitely sounds like something you don't want. What a horrible branding name. Who names something called UTI like they've never been to a doctor? It sounds like it was named by a 14-year-old who was never had a girlfriend or something. I'm not even going to look at UTI just because I think that's ridiculous. Actually, I should put BTC back on the screen so we can kind of watch it in the background. Blue says, Hex is a scam, bro. Yeah, I have UTA. Were you asking about UTA, not UTI? Because that's a totally different story. And as Baloo just answered your questions, upthrust action. So it's often categorized, well, in these illiquid markets, potentially by people that are doing bigger buys and not really patient throughout the trading range, and that because the supply is limited, they can run the price up accidentally in the trading range. It doesn't invalidate the trading range. We had gone over that specifically in the private group as well. Can you scope out Ren and Dot? Okay, I'm going to write these down, and we will go over that. I just want to go over a few of your guys' thoughts before we dive back into the chart. So Ren and Dot, we will look at those. Let's take a look at XLM versus USDT. Sure, why not? Whatever you guys want. You guys are in charge of the show now. This is the community aspect, so thank you. Hex is bad. So here's the thing about Hex. First off, not a great branding name. Cool logo. Richard Hart's an interesting person, especially if you research him. More importantly, though, I just always think it's awkward when you have less liquidity than market price, because it means it's just a manipulation of mindset. Like, for instance, we could create a token, and we could get the price to look like it's worth billions of dollars by spending very little money. So it's a great marketing tactic, that's for sure, to have low liquidity. But if anyone had $1 million of Hex, just like we pointed out with Bitcoin, they could absolutely destroy the price. So a little concerned on that. And they have these arduous lockup periods, which seem more like a pyramid scheme to me, because I can't just take my money out whenever I want. But that's apparently a selling feature as a COD. I don't know. Very difficult conversation. I tried to line up with something with Richard, but then, the weekend happened and the beaches have been so sexy that I just don't want to do any extra more work than I have to. That's another side point. So yeah, we've got ADA, XLM, DOT, and REN. We'll only give, we'll look at two more there as well. 50K incoming for Bitcoin. Yeah, we do agree. Actually, we think we're going to 85,000. So who cares about 50,000? It's kind of like, why would you care about the middle ground? We'll go by 50,000 in the blink of an eye. It'll be like our backup phase, effectively. Like the 50,000 will be the backup phase for Bitcoin. It'll be absolutely worthless to care about unless you're taking leverage trades, because we're going to 85,000 next on the next swing. That's for sure. Algo and Wi-Fi against USDT. Yes, okay. Algo. So this is a lot. This is a lot, you guys. You're asking a lot of me today, but I'll try my best. I like Wi-Fi too, by the way. It sits in the DeFi. In the DeFi bag. I think that's interesting. This guy, Jay Singh, does Neo Link, Polkadot, ADA, XLM make you a millionaire shorter than a period of time in Bitcoin? Guys, that's ridiculous. You shouldn't be concerned about becoming a millionaire. I think what you should be concerned about is having a good life, filling it with people you love and interesting things to do, because you can do a lot of that stuff without being a billionaire. Well, you know what else you can do without being a millionaire? You can be kind to people. You can get jacked by picking up rocks and throwing them over your head. So more than focusing on just financial success, because it doesn't always most of the time will not lead you to happiness, focus on what you're interested in. That's significantly more valuable than being like a millionaire. Look, I've got some friends that have made hundreds of millions of dollars, and I've got other friends who have made millions of dollars. And the people who are the most happy are not happy because of how much money they have. They're happy because of the things that they chose to do with their life. So that's like a really important part to remember. Don't just think like, oh my God, like money. It just solves very small, thin areas of problems called money problems. Ian Gifford says, smash that like button and subscribe if you want, guys. Thanks for all the consistent content, quality content, Tio. I appreciate that, Ian. Yeah, remember, guys, we're only like a few hundred people away from 30,000. It would just be like, it'll be so big for me when we hit 30K. I really appreciate that. So we'll go with there. Do different tokens live in different trading phases? Arjuna says, do different tokens live in different trading phases? They're always moving, and that's a highly dependent question. So you don't have a token that like it's just always in phase A. Everything is always changing. So that's a pretty important thing to keep in mind, that everything is always changing. Rich people always say money won't buy you happiness, but if you go to our Twitter, we also say being broke won't buy you happiness either. So remember, having a lot of money or having no money, neither of those buy you happiness. What gets you happiness is a choice of what you do with your life and who you spend your life with. It's significantly more important than how much money you have. Boom, boom. Money gives you the opportunities. No, kindness, competence gives you the opportunities. Be damn sure about that. Kindness and your competence has nothing to do with how much money you have. Okay, we'll move on from that conversation. But Desmond Phillips, thank you for the super chat. He says, are there any hints in volume signatures that can give you intel on Link, possibly reaccumulation caps? Yeah, so we've gone over Link already. If you just rewind the video, you'll be able to see that. Okay. Here you go, Mr. Miyagi or Wyckoff. Definitely Wyckoff. I mean, once I figured out what the trading ranges meant, Calvin, and look, because everyone has been so kind with us today, before we go in, And we, before we go in, Calvin has been such a sweetheart to give us, I'm going to, hold on a sec, we'll give you guys my face for a second. I want to do something. Every time I see that you guys have given us like, there's like $50 in super chats on the screen right now. Let's go here. Okay. So for those of you that don't know, first off, actually, this is probably a great time to do this, but we'll do it in 2 parts. So first off, today's episode is brought to you by BlockFi. So you guys are going to have to sit through an ad in a second. But more importantly, what we're going to do is, because you guys are giving us super chats, we're going to make a loan. So Kiva is a non-profit 501(c) that makes loans to underbanked and underserved entrepreneurs around the world. This is one of our favorite platforms, and it aligns very, very well with our mission as a business, which is to try to help the underbanked and the underserved, because they're the people that need it most, especially during these trying times. So we've got another $52 to be loaded in the account today, which is about how much we've got in super chats. And we're going to find a group to lend those to. We usually pick women because they're the most responsible. Men might make you more money, but they're also more likely to lose that money that you lend them. So we usually just lend money to women entrepreneurs. So there's a woman in Senegal. She's got 20 hours left. Let's see. Oh, I'm not a big fan of the field risk rating, though. It's a little bit difficult. I always look for higher ratings on the people who are helping out with the loans. Make a loan, change a life. Here we go. The 11 Candelas group from Bolivia. Let's see what their story is. Perfect. There's the field rating I like. 4 stars. So this is a communal bank of 11 Candelas, is made up of 8 members and friends who are led by a board of directors. The loan will be taken to benefit micro entrepreneurs, including Aluela. Currently has a business selling shawls. She says she learned this business from her mother 10 years ago. So the loan that Aluela will be taking out will be for increasing her capital to buy wholesale wool that she will get from wholesalers in the city of El Alto. Okay, sounds great to me. So we're gonna do, we've got that $50 we can lend in, $50 we can lend out there. So if you guys haven't yet, you can join our Arcane Bear team, and we can make we can actually loan together. We were rated in the top 2 businesses to join Kiva this month because of all of you guys. I don't know if I have enough to make the $7 donation to Kiva right now. So I think it was only $3 we could do for the donation to Kiva. I apologize, Kiva. We'll get you back next time. I just want to, $52 is the credit we have. So there we go. There's the $52 we have in our credit. What the fuck was I not signed in? Are you kidding me? One sec, guys. I swear I had clicked signed in just before we got to this. Okay, let's go. I apologize. That was like, we're so close to that one going out really, really well. So guys, I'm just going to log into my account here. I apologize for the confusion here. Okay, there we go. There's our, we'll complete that order for our $52 loan here for the Candelas group in Aluela. We'll share that through Twitter as well. And actually it's a perfect moment for you guys to follow us on Twitter as well, and you can join in our conversations there. So thank you to Calvin and everyone who gave a super chat today. That money went to helping fund Aluela and her need for more wool so she can make more clothes. Follow us on Twitter. And then just in this moment as well, guys, we are going to run an advertisement, and then we're going to go through all of your guys' thoughts and questions, because today's episode is brought to you by BlockFi. And, well, here you go. I want to give a big shout out to BlockFi for sponsoring today's episode, helping us bring you guys all the up-to-date market content that we do. BlockFi provides their customers a high-yielding interest rate on all your favorite cryptos. Plus, if you sign up in the links below, you can get up to $250 in Bitcoin added when you fund your account today. So from Bitcoin, Litecoin, Ethereum, and the USDC stablecoins, this is a fantastic way to continue to grow your financial freedom. With up to 8.6% APY that starts earning instantly and compounds monthly. Simply deposit your crypto on their secure platform and you're ready to go. Easy to use with top-notch security. Not only that, BlockFi is now partnered with Visa, so you can join their waiting list to get your Bitcoin rewards card. So every time you spend, you get rewarded in Bitcoin. Another great way to continue to grow on your financial goals. Invest while you spend. Great idea. They also offer crypto loans, so instead of spending the precious Bitcoin, set up your Bitcoin as collateral and get instant USDC loans. So go to the links below, sign up today at the description at www.arcanebear.com/BlockFi. And not only that, guys, because of this partnership between BlockFi and Arcane Bear, We give part of our marketing budgets every month to Kiva, which is a nonprofit organization that helps the underbanked and the underserved around the world by providing no APY loans to rural entrepreneurs that maybe are in Uganda or Rwanda that would never be able to get a loan before. So not only are you going to earn more Bitcoin in your interest rate with BlockFi, you also help fund entrepreneurs around the world. So sign up for BlockFi in the links down below at arcanebear.com/BlockFi or blockfi.com/arcanebear. Thank you. Okay, thanks for joining us in those ones. We wanted to build that partnership with BlockFi because then again, it helps us give more money to Kiva. I think this month alone, we gave over $1,000. So thank you guys for going through this process with us. And let's dive back into the charts. That way we can continue to look at what interests you. So far on the list, for those of you that are interested, this is what we're going to look at. So anyone who asked for anything more, I apologize. You're too late. You didn't give a super chat. So we're going over Ren, DOT, XLM, ADA, Algo, Wi-Fi, and GRT. That's what we've got on the list, and that's about what I have time for today before the dogs are going to get really mad at me for not taking them for a walk. Okay, let's go back over to where we were running KNC. We'll start from there at the top of the list. Ren. Okay, so Ren is an interesting one. There's a lot of potential there. We definitely know that for sure. So let's scroll down. I've already got Ren open. We'll just do quick kind of run-throughs. Ren, we've been watching through a rising gradient bottom. Oh, wow. I'm not sure why we didn't get... why we didn't have a private newsletter out on this one, too. Damn. We drew it up, but I don't think Blue and I added it to the forge. KNC was the one we added, but here you can see a nice little spring. Our first break above the box. I do suspect that the backup is going to come to around 48 cents there. Ren is a really powerful player in the DeFi sector. We're looking for a little bit more declination of the volume. So maybe a retouch of the top of the trading range at 51 cents would be healthy to see. Okay, that's about all I can do for that. You guys can make your own conjecture based off what I just said there, because this is not financial advice, ladies and gentlemen. Do your own homework. Okay, so next on the list we have DOT, one of the other big players in the potential protocol layer. We're going to be taking a look at DOT as soon as I can find it. I'm not sure why I moved it all the way down to the bottom, but there it is. There's DOT. So DOT, we had actually been watching for months before. Talk about a beautiful cup and handle. This is the prime time to say that, look guys, anyone who tells you a cup and handle is forming on like a 4-hour chart doesn't know jack shit about what they're talking about. Cup and handle should take at the minimum multiple weeks to form, and they should form through a beautiful horizontal trading range like this. Now, one of the fun parts here is that DOT has been very powerful since this cup and handle kind of formed itself. Again, as you can see, the backup. If you want to compare it to Ren, see how the backup phase didn't even come to touch to the top of the channel. Very bullish. And again, the other important part here is to recognize the volume during these backup phases. These are one of the key indicators that you'll be able to tell. We left the box and volume started to decrease, and then you saw a big spike of sell volume that pushed us down. That was the key indicator that backup phase was done. You could also draw it like this, which is, I think, another great way to kind of look at these horizontal trading ranges. Is if we zoom in, and we'll retroactively look at DOT as an example for what we're studying, which is schematic 4, I believe. Wait, hold on. Yeah, schematic 4. So, no, schematic 1. So schematic 1 is highlighted by a phase C drop below the channel, although I think they're usually a bit more pronounced than that. So here you go. This nice spring below the channel before a breakout. DOT has been explosive since then. We've seen no real easy to trade like reaccumulation, but these are very volatile. You had 4 months to accumulate since September, or at least 122 days, so almost 4 months. Almost 4 months. Real close though. So in terms of entering trades here now, I'd be a little bit weary, as outside of the box we are already up around 160%. I do believe it's going to go probably higher, but most likely what we will start to see here is the formation of a new trading range. Again, not looking like we're going to stay up this high. I do suspect DOT will start to actually decline. We could maybe come back down and test the $13 area to provide us a much kind of cleaner retest of this trading range, which would be something like this. where you have, again, your primary support, your buying climax, your shakeout, your secondary test, your spring, and then the breakout above your box. So I do believe DOT is going to go higher, but we're probably going to see a nice reaccumulation channel here, especially since we saw a Bitcoin and Ethereum and where they are effectively as well. Okay, cool. So next thing, DOT is done. XLM was the next one you guys wanted me to look at. Thought I had XLM here. Oh, there it is. So XLM is already quite high up, but we are forming what appears to be a new reaccumulation channel. We are right around the POC line, or the proof or point of control, which represents the newest area of buying and selling. We were in a multi-month reaccumulation channel, at least from what I remember. Let's go out to the 4 hour. It'll give us a much clearer picture. Yes, we'd already drawn this one up. Again, this is kind of the fun part about retroactively looking back. You can see how these horizontal trading ranges interact with one another. You had your primary support. Come on, give me my brush back. Your primary support, your selling climax, your automatic rally, secondary test, spring, LPS test, LPS, boom, breakout for the primary SOS. Here's your backup, again, right to the trading range, something we really like to see, and then an explosive move afterwards, upwards of a few 100%, at least out on the outside of the box. If again, we look at the 45-minute for XLM here, we can see that we are forming a new trading range. So what we want to do here is be pretty simple about this whole thing. We're going to draw from the top of the box. We do have a lot of selling climax that came in here. This would be your primary shakeout, I guess. What you would want to see, and it looks like we're going to get, is a close above the POC and then likely another breakout. Once these things start to move, again, it just really comes down to a supply and liquidity issue. So it's likely that XLM will continue to break art, because if nobody can told you, we are in a bull market, ladies and gentlemen, and that's really all you need to know for that one. Okay, so next thing, ADA. ADA is already, from what I remember, a long ways into its conjecture as well. We've gone over it before, but as you can see, let's see, here we go, about on the daily. Okay, here was ADA through our horizontal trading range. We had our selling climax, our automatic rally, our secondary test, our spring, highlighted again by this massive amount of volume that came in. Every day afterwards, we saw the backup phase. Again, important part about the backup phase, declining volume here. And then we've risen out ever since. The more important parts for ADA was this final trading range here, which represented a pretty sexy one, a little bit more volatile than I'd like, at around 30% from wick to wick, which is way too much for any type of leverage trade. But again, I think what's important to note here is that, look, first off, I'm not invested in ADA. I'm a little confused. Seems like a dead chain to me. How they've taken so long to raise so much money to produce something that doesn't yet work is a little difficult, especially when you have Avalanche. Hard to say. I don't think that ADA can outpace Avalanche in terms of technology, but it'd be great to be able to have Charles Hoskinson on the show and ask him. So if any of you are friends with him, hey, get him to email me at info@arcanebear.com so we can book a show. But nonetheless, way too volatile for me to be in a trade right now, especially since that primary reaccumulation phase already exploded here on the 14th of December, alongside many of the other DeFi plays. It is very bullish sentiment, though. You have 190% from the reaccumulation. And I think from the bottom of the spring itself, we were measuring upwards of like 1,100%. Yeah, 1,300%. So in terms of, if you were to ask me, would I rather be sitting on Ethereum or Cardano, I would just have sat in Ethereum, because the gains are almost equivalent, and you at least have a working product that tons of developers are building on a day-to-day basis. Okay, so next thing, Algo. Not on my list, but definitely a good player in the tech space, looking at stable coins. Let's go Algo to USDT Tether on Binance. Fair amount of liquidity there. We're getting to the end here, so only two more to go after this. Whew, way too much volatility in Algo, but where would you even want to start this? Hard to say. Although, this is starting to look interesting. What I would be interested in is this, the shorter trading range, but it's looking like a very, very beautiful bottom of a cup. I think what you're probably going to witness in Algo is a cup and handle. Again, we are in a bull market, so that's always fun. But I think we're going to get a cup and handle, probably something like this. So we'll leave that drawn there. It's my short take on Algo. Next thing. Okay. Wi-Fi. Wi-Fi is a big player in this space. This actually gives us an ample opportunity to go over something that we don't normally go over. Number two, there are two trading ranges here that are forming. Number one is this much larger trading range, but number two is something that we've been having as a discussion in the private group, so this will maybe help answer some of your guys' questions. And the idea is around, do we see rising gradient bottoms or falling gradient patterns in reaccumulation ranges as well? And the answer is yes. It's not always the case, but there's a very real argument to say that back here was one of the primary trading ranges that you wanted to be keeping an eye on, and that this was the actual breakout pattern to begin with. So it would have been something like this. This would have been phase A, your selling climax, your first automatic rally, secondary test, spring, boom. And then phase E was everything outside of here. So these were the best areas for reaccumulation in terms of Wi-Fi. Shout out to Blue for that one. I believe we went over that in the private den in October. But again, look, it's not always horizontal trading ranges. They're just the most common. You can have these falling gradient patterns as well. And more importantly, one of the things we can start to ask ourselves is this an even bigger trading range? And it starts to appear that way because we're now bumping up against the final lines of resistance. So you could have yourself have that same question. It's okay, well, your primary support, your buying climax, your first test, your selling climax, your spring. Spring is in the same place. First test, LPS pretty much this whole way. First sign of strength, and then now we're about to break out of the box. So effectively the best entries are back here in October, November for Wi-Fi at around 15 grand. It's a really interesting DeFi player, so keep that in mind. And then GRT is how we will end this episode today. So thank you guys for joining us. Please give us a thumbs up if you have enjoyed this content. If you're new to the Bear family, please hit subscribe and hit that little bell. That way anytime we go live, you guys will be notified. We are going to be trying to do a live stream every day, like champions, during this bull market, maybe even for all of 2021. We might actually get a bull market that is that long. So kind of like a little bit of a goal of mine. So you guys will be able to rely on me for being here every day at around 1 to 3 p.m. Costa Rican time, where we go over exactly this. So GRT, the finalize on the play. There wasn't enough data there the last time we looked, that's for sure. And we had made some conjecture, from what I remember, even though it's not drawn here, around the potential of another falling style trading range, very similar to that. I think this is a great reason to understand patience, but it does look like we might be seeing another cup and handle, just because the bottom of this is so well curved. I do suspect this is how you'd see the backup phase. This is how you're going to end up looking at the horizontal trading range. This will be your phase C, phase A, phase B, phase C. So again, I know these drawings are kind of mucky, but for those of you who want to study, you can join our private group by going to arcanebear.com/private, which are in the links below. No questions asked, refund guarantee if you're not happy, but out of the hundreds of members we have, very few have ever actually opted to have that. So really happy to see that we provide such a valuable service to everyone. Again, if you can't take that risk, I don't know what you're even doing in the markets to begin with. So go ahead and sign up. Anyways, I think that's what GRT will do. It does look like it's about to form, although we could make conjecture that the trading range was actually thinner and down here, and that this was your buying climax, very similar to how we talked about Link, and that this was your primary selling climax. Again, some of these ones are a little bit harder to tell for a number of reasons. A, they're new tokens. They're very illiquid. And there's a lot of crazy hype volatility in a bull market for absolutely no reason other than there's just money sloshing around back and forth between absolutely everything that there is. Anyways, I really appreciate you guys' support today. Thank you all for joining us on another episode. This is Tio with the Arcane Bear. I'm closing the book on everything we've gone over. I hope you enjoyed today's episode. Go out and remember how we kind of went through this. You don't need to be a millionaire to be kind. You don't need to be a millionaire to be competent. What you do need to do is practice, study, and continually remind yourself that it's a fucking miracle that we are on this planet at all, and be grateful for that. And I constantly remind myself to say, close your eyes, say thank you. It's good to be here. So thank you, ladies and gentlemen. This is Tio with the Arcane Bear. I'm signing off for another episode, and we will see you guys again on the other side.